Hello and welcome into the KE Report. Shad and Corey here, getting an update from Sean Brodrick, editor of Wealth Megatrends and contributing analyst to Weiss Ratings Daily. And Sean, always great to get you on the show about once a month and just see what's on your radar on the macro side and what kind of equities have your interest because you follow a lot of different sectors. I guess let's start off with the big elephant in the room, and that is the election win, not just for Trump, but really the Republicans across the board. What kind of ramifications do you think this has in the marketplace?
Yeah, well, when I woke up the day after the election, I saw what was going on in the market. It was buy crypto, sell gold. So we sold a bunch of gold minor positions, took gains, which now that looks great in hindsight. I do think gold has a ways further to go down. I sent you guys a chart, which you can post with this. Now, where you draw the beginning of that Fibonacci retracement chart is a matter of argument. And I just took like a big breakout in March. You could go earlier in March. You can do other things. But that gives me a pullback in gold down to $2,475. So I won't be doing any buying before then. We did sell. We took a bunch of gains. And we still hold gold and silver positions. But we're just going to hold on to that and ride it through because I don't think that this big rally in gold is over. Not at all. There are often big pullbacks in the big rallies, and I think that's what we're seeing right now. What else did we do last week? Well, we bought a Bitcoin ETF, IBIT, and we bought MicroStrategy. And just yesterday alone, MicroStrategy was up more than 25%. And just yesterday alone, IBIT was up 13%. And then over in Resource Trader, we picked up Mara, which is up like 30% yesterday. So you should have some exposure to Bitcoin right now. If you want, I can give you my reasons why. It's not just a thing. There's a actual turning in the market to this now for good reason.
Okay, Sean, break that down. Share with us why then.
All right, well, Donald Trump won the presidential election, but before the election, he pledged to make America, quote, the crypto capital of the planet and create a, quote, strategic reserve of Bitcoin. Now, he went to a big crypto rally in Nashville. He launched World Liberty Financial, which is a new venture to trade cryptocurrencies. And also he promised to remove Gary Gensler, who's the chairman of the Securities and Exchange Commission and who is famously cracking down on crypto stuff. So Gensler will be gone, which just removes a weight from that entire group. And Trump is definitely pro crypto. And now the talk on Wall Street and in the halls of Congress is that we're going to have a U.S. strategic Bitcoin reserve. They already have a bill filed, which is the Bitcoin Act of 2024. It's probably going to be refiled next year as the Bitcoin Act of 2025. And that includes a federal Bitcoin purchase program that directs the Secretary of the Treasury to buy up to 200,000 Bitcoins annually for 5 years, which would give the U.S. an additional 1 million Bitcoin over 5 years. But of all the global governments, at least talking about known holdings, the U.S. already holds the most. It was like confiscated when these criminals were doing something on Silk Road, and one of the things that they confiscated from them was 213,000 Bitcoin. So the U.S. has a lot of Bitcoin anyway. And so now we are likely to see more official buying of Bitcoin. If the U.S. starts to buy Bitcoin, you can bet other nations that deal with us are also going to buy Bitcoin. That's a huge thing. The other thing, well, actually, there are two other things. And I expect more public companies to start buying a Bitcoin. Now, most of the Bitcoin owned by corporations is actually owned by one company, MicroStrategy, which is in the Supercycle investor portfolio. But at a shareholder meeting in December, Microsoft is going to let its shareholders vote on whether or not Bitcoin should be added to the corporate treasury. And if they say yes, then you can expect other parts of corporate America to also have Bitcoin in their treasuries as a strategy. And then finally, the big banks. Big banks have started to dip their toes into Bitcoin. When we looked at the second quarter filings, we saw Goldman Sachs and Morgan Stanley had moved into Bitcoin ETFs. But if the government starts building a strategic Bitcoin reserve, and especially if corporations start building Bitcoin assets, I'd expect the big banks to build up their own Bitcoin reserves just to facilitate transactions. So that's a 1, 2, 3 that I think is really going to power up Bitcoin next year. Now, we've already seen a big move in Bitcoin, 30% since the election, up 30% in a very short amount of time. But I work with a guy who's a big cryptocurrency expert, Juan Villaverde, and he thinks that we could see Bitcoin climb another 42% by the end of February. So he's also a cycles guy, and he does some really good work. So looking at those things, you just have to have exposure to Bitcoin at this point.
Yeah, Sean, it'd be big news if the corporations like Microsoft or fellow corporations started holding cryptocurrencies on their balance sheet, especially Bitcoin. And there's a lot of people that have higher targets for Bitcoin. But I also wonder how this new administration, featuring Elon Musk prominently in a new Department of Government Efficiency, aka Doge. And Elon is famous for making Dogecoin run. I think after the election, Dogecoin ran 100% just because of this news of Elon Musk's position and the fact that they are winking to the crypto community with a Doge department. Do you think that Elon being in there and also being a friend of cryptos has also helped fuel the fire?
Oh, well, it certainly can't hurt. I mean, we'll see how long that lasts. Doge, to me, seems much more speculative than Bitcoin, but who knows? I am not the cryptocurrency expert that many people are. So I don't really know. I know what I'm buying is Bitcoin, but if some of the other altcoins run, I mean, who knows? Maybe even Shiba and stuff like that. Well, that would not surprise me too much.
Well, Sean, you're not alone in doing that rotation trade. There's been some very interesting stats that have come out just in the last few days about the rotation into BlackRock's Bitcoin Trust, IBIT. It surpassed BlackRock's Gold Trust, IAU, in net assets. It's still a long way off from GLD. But overall, look, there is this rotation trade. We also saw one of the largest weekly outflows in GLD just yesterday or 2 days ago. So this trade is happening, but it all brings up that concept of, look, Bitcoin is much newer than gold. And while it's not the same as gold, it seems like governments and investors are looking at it in somewhat a similar way. Does that mean in your eyes that Bitcoin still has more catching up to do with gold, even though the overall price of Bitcoin is so much higher than gold? But the problem being gold's been around for longer, so there's even more of it around. How do I balance all that concept out?
Yeah, well, that's actually hard to really figure. I mean, I understand people are disappointed that gold isn't doing better. And by the way, I would like to reemphasize, I do not think gold bull's run is done. I believe we're going to see a big gold bull run next year. It's just right now, Bitcoin's becoming a lot more popular. And because of changes within our own government, there are things that are definitely fueling it that gold doesn't have right now. So just the smart thing is to be open to this. I mean, I could complain about gold is real, Bitcoin is not, and stuff like that. You can complain till you're blue in the face, but you'll just end up poor. Whereas meanwhile, we've seen a huge shift in our government, which has become much more pro Bitcoin. I think, standing in front of that would take a lot more courage than I have. I'm just going to ride along with it and I'm not really worried so much about gold now. I have reason not to worry because I took a bunch of gold gains. I would feel sorry for anyone who has most of their portfolio in gold and miners, and they definitely have my sympathy. But maybe they want to hedge a little bit just by buying some Bitcoin just to ride that up. I don't know. Even though there is rotation between the two, I'm not actually looking at them as competing things because what drives them is actually different things. And I think that next year we are going to have worries about the global financial system. Maybe that will help Bitcoin at that time, but it's certainly going to help gold when we have that. So that's kind of how I'm looking at it.
Well, and Sean, another factor to bring in here is that the general U.S. equity markets have just scorched higher to new all-time highs post-election results. And a lot of times, the cryptocurrencies do trade in tandem with tech stocks. Tech stocks have continued to blast higher, as have even the small caps. So when we see such a big move in the U.S. equities in a response to this, are there any other sectors within the broader universe of equities that you're seeing megatrends developing in?
Well, certainly online finance. I mean, one we added the day after the election as well. I added Block just because I like, finance, tech, stuff like that. And their management is really making a push toward being as profitable as possible. And the earnings came out, they kind of disappointed people on like revenue, but the next day it just went higher. And then Monday it exploded. I mean, just boomed higher. And it's up again today. Other ones that are up in our portfolios, Nvidia, AppLovin, Amazon, even some defense stocks like Kratos, But then other stocks in these groups are not doing well. So you have to be more selective. But one thing is that if rates are going to be higher for longer, and I'm sorry to pivot like this mid conversation, but if interest rates are going to be higher for longer, that's going to help bigger companies. And the big tech companies were already booming anyway. I believe we're in a new tech super cycle. Now they'll have plenty of money on their books, money they could use to buy Bitcoin, just as an aside, but plenty of money there, which is now going to be earning higher rates of interest. So companies like Amazon, Nvidia, Google, stuff like that, they're just going to do better anyway. And also, because of the change in government, one thing you'll remember that the Biden team was doing was like cracking down on too much concentrated power within corporations, controlling too much of the market. They were against certain mergers in the oil industry, stuff like that. They were against certain tech mergers, stuff like that. All that's going away. Again, that plays to the advantage of the large companies. So large companies and also tech companies are good, and large tech companies should do very, very well. That's just but also smaller ones like Square. I mean, it's not small, but it's smaller, and it's just taken off like a rocket. That looks really, really good.
Yeah, to your point there, Sean, Alphabet, Google, what are they going to do? Are they going to actually break up that company, or is Trump just going to let it ride? Who knows? But Sean, right now, timing wise, because Trump won't take office for about 2 months, is this kind of a Goldilocks phase for some of these sectors that are screaming higher simply because, well, Trump's not in power yet, so he doesn't have the opportunity to disappoint these investors that are piling into these areas?
Yeah, I mean, people, of course, wish cast, they like project their hopes onto people and onto the future. They always feel good about the future. We are always optimists about the future, because if we weren't optimists about the future, we'd kill ourselves, right? So people are optimistic about the changes that will come. And we know there are big tax breaks coming. And in fact, in the next issue of my Wealth Megatrends, which goes out Friday, that's my monthly newsletter, I have a chart of how much it will improve corporate profits for each 1% cut in the corporate tax rate. A lot of that is what's being priced in right now. We are going to get lower corporate tax rates, and that's going to improve the earnings per share picture of companies across the board, at least those that actually pay taxes. So that's something that is going to happen. Whether people are also being more optimistic about things that aren't going to happen, I can't say. But definitely the corporate tax cuts are coming. And so that's one of the things being priced in now.
Well, Sean, another change that people are anticipating is Trump has been vocal that his administration is going to push back against some of the policies in the 2022 Inflation Reduction Act. And that had a lot of money in there for things like critical minerals, infrastructure build out for EVs. There was a lot of stuff in there for clean tech. And then obviously there was money in there to help support nuclear power, hydrogen power. How do you think the pushback on the Inflation Reduction Act may affect some of those industries that were benefiting from those policies?
Well, I wouldn't want to own any wind power stocks right now, that's for sure. And I'm kind of feeling same way about solar stocks. They had their own problems anyway, one of which is overcapacity in the industry and like stuff like that. So they are having the rug pulled out from under them. Nuclear power, maybe that's part of the thing weighing on most uranium stocks now, but Trump is a big fan of nuclear. So I think that is kind of misdirected. I expect him to, he is going to remove some things in the Inflation Reduction Act, absolutely. But I think, if anything, he'll be more pro-nuke than like Biden is. So I'm not actually worried about that.
So, Sean, it sounds like there's a lot of opportunities out there, right? But
Oh, yeah.
it does sound like you're rotating some money out of some sectors into other sectors. How concentrated are you in any sectors? How much are you diversified and how much are you just focused on these ones that are breaking out?
Oh, I am really diversified. For me, I I still have all sorts of things across the board. So I have a few Bitcoin leverage positions, and like stuff like that, but it's not like the whole portfolio. You could build a portfolio of cryptocurrencies, see how that does for you. It'll probably do well in the next year. I don't know. But I always like to be a little diversified anyway. I like things like fintech. I like things like cybersecurity. I like things like defense stocks. Those things aren't going away, and those are things that I want in my portfolio. As for natural resources, we are in a tough time for natural resources right now. I think they are throwing babies out with the bathwater on this stuff. I expect gold to have a very nice rebound, and so I'm not that worried about that. That said, I did take gains, so I have a lot less skin in the game than I did. I had been heavily weighted toward gold and silver. I'm not anymore, but I still have gold and silver positions. I think betting too much all on like one industry or even one sector, maybe that'll work out for you. And, sometimes it does. We hear about these guys on Wall Street who have portfolios that go up 100% in a year. Good for them. But I'd rather spread the risk out a little bit. I sleep better at night, and that's just how I'm doing it.
Well, Sean, I think we'll wrap it up there, but great thoughts on having a diversified approach in the way you manage your portfolios, looking at different sectors, getting into the ones that are running and maybe getting out of the way of the ones that are going through a corrective phase. But it sounds like you got a lot of different irons in the fire there, and always appreciate getting your thoughts here at the KE Report. And if people want to follow along with Sean's work, definitely click on the link below this interview. It takes you over to Weiss Ratings Daily, where you can see his publications like Wealth Megatrends and Resource Trader, and take advantage of the information that Sean shares with his subscribers. And Sean, looking forward to the next conversation.
Okay, thanks, guys.